Hello and welcome to another episode of Monday Markets. Thank you for your support on the channel. Before I bore you with my monotonous voice, please leave a like on this video as it makes a difference. Subscribe, do all that type of stuff. We say it at the beginning every time. You've been very receptive and we're grateful for your support. Now, let's get straight into it. I think this is going to be a rather tricky week to trade, and that's both contextually in terms of where the market is relative to technical levels, but it's also fundamentally because we have a rather busy week in front of us in terms of headline risk. We have rates decisions in the US. We have big earnings for big tech companies coming up as well, rates decisions in Europe and the UK, and some more unemployment data coming out towards the end of the week as well. So it's rather jam-packed. So you essentially have a situation where you have the market in an area of monthly resistance with a bunch of headline risk to go with it, and that just makes it for rather tricky trading because none of us realistically have an edge in predicting how these news events might unfold. And also, I don't think there's enough evidence at the moment to make a clear case for a decoupling, i.e., why should I care about legacy, macro, whatever headline news? We've decoupled from legacy. I don't think that argument has enough evidence to support it at the moment. I certainly wouldn't feel comfortable ignoring potential macro catalysts in either direction just because crypto went up. So again, this leaves us in a rather tricky situation where the technicals are unclear, or at least at resistance, as we'll discuss, and then there's headline risk layered on top of that. Now, as far as the technical picture goes, I won't reiterate too much what I covered in the last video because I think it was a rather comprehensive breakdown of the high time frame levels. Unsurprisingly, they haven't changed given it's only been a week, but it looks like one day away from the monthly close, we are going to spend most of our time around this monthly resistance level. At the moment, there's no clear evidence of a monthly time frame breakout. I think that either that or the failure of it is going to be driven by the aforementioned headlines we have coming this week. But broadly speaking, we are in an area of resistance plus headline risk. And again, however you want to slice it, whether it's on the monthly at this 23.3 level, whether you want to just take the highest weekly close within the range as well, landing you within $1,000 of the same type of area, the market is at the range high. Now, even if we are bullish, what do we do at the range high? Well, we don't buy it outrightly, aside from some rather rare circumstances. Typically, if the market's at the range high and you have a bullish directional bias, there are two setups that are available to you. The first is a breakout of the range high, where you're just assuming trend continuation and expansion through those value areas and continuation higher to backfill some of this 30k sloppy selling. That will be fine. Or you're expecting the range high to do its job somewhat, enough to give you a higher low before offering that type of continuation and breaking the second or third time round. And those higher low scenarios, as we've discussed, would have to materialize around the 20k handle where market structure was broken, or in any case, at an extreme, it can't fall below the summer range reclaim because that's where that's the sort of edifice on which all the bullish arguments are built. So wherever you get your high or low, it can't exceed the entire reason for having that bullish premise in the first place. So we reclaim the summer range low, good. If it's going to form a higher low, it more or less has one area-ish, as we discussed last week, to do it, which is around 20k. If it doesn't do that, then all the bullish arguments disappear and we're fucked, basically. So with that said, what information can we currently gain from this monthly level of resistance? If we look on the daily time frame, there isn't a whole lot going on yet. You could make an argument that you've got like a bit of a spike and a close below the monthly level on the daily time frame. That might be a bit premature. And again, I don't want to read in too far as specific candle closes go because of the volume of headlines we have coming this week. What I will say is there is some evidence of weakness at this monthly level of resistance, because if we take this monthly level, and let's just label it as M so we know where it comes from, if we view it through the lens of simply an intraday range, where 23.3k is your range high and your range low is the bottom of that structure at 22.6k, or even the lowest close in the range at 22.5k, what we have at the moment is a failed breakout at an area or in an area of monthly resistance. So this is our range high. The market broke above it, closed back below, and so there was no acceptance through that monthly level. For all we know, this could well be the monthly wick given this context. Again, we have monthly resistance plus a failed range breakout at that resistance on lower time frames. So there is some confluence going on. And typically, as you know, whenever you have a consolidation and the market attempts to break through one side of it and fails, your general expectation is for the market to trade to the range midpoint and to the range low. And the secondary expectation is that if the breakout gets reclaimed once again, it's that whole double fake out pattern we've discussed before. That is, the market starts to get back above where the fake out took place. That becomes a sign of strength once again. And this thing is just completely disappearing while I'm talking, which is interesting. In any case, you can start to build a bit of a picture, whether you want to anchor your view based on the monthly resistance and the high time frame levels, or you don't. They more or less land you in the same spot, which is that there is a failed breakout and some resistance happening in the context of monthly resistance as well. And that's what makes it quite tricky. You know, if this is our range, and we have a bunch of headlines coming up this week, it's going to be a bit of a pain in the ass to trade. We've already had one deviation to the upside. It's not outside the realm of possibility by any means to similarly have a deviation or even just a deeper dip given the monthly context to the downside. And it's far less clear than it was when the market was just trending, or where we had clear momentum continuation between levels. The way I like to think about it is the following way. So let's say this is our important level. And let's say this is our important level, and the market, you know, does whatever, gives you a bullish pattern and starts moving away from the support structure. In terms of momentum continuation, I think the way I like to think about these things is everything between levels is ripe for momentum continuation. So if you're getting continuation setups here, or here, or here, or here, or here, wherever this takes place between levels, those are fine places to take momentum continuation setups. Why? Because the driver of the market is that we've held the important level and our reasonable target is the other important level. By definition, everything in between is far less important and we can be a bit more aggressive in our positioning. However, as you as you move from support to resistance, your odds of continuation start to decrease the closer the market gets to a potential turning point, right? So would you want to play momentum continuation from support? Yes. Through the mid-range? Yes. Between the mid-range and resistance? Yes. At resistance, the odds aren't as good. At the very least, they weren't as good as they were from support, through the midpoint, in no man's land, and that's the whole point, right? If you're in no man's land, momentum continuation is great, especially if you're getting momentum continuation from a high time frame level, and then you get your setup in no man's land with a clear target. That's awesome. And I think that part of the leg is no longer available because the relative risk reward of trading momentum continuation setups into resistance as opposed to into nothing, I don't like those odds as much. So I think base case, given this is a weekly video and whatnot, this is the range we're operating within. And at the moment, we are finding resistance at monthly levels. As discussed before, if this range breaks to the downside and we have some scary news or whatever catalyzes the move lower, in one form or another, the market has to hold around 20k, which is some version of this consolidation. And if that's fucked, then we're all fucked. So it's pretty straightforward, actually, in terms of the decision tree that follows from that. I hope that's helpful. Leave any comments if you have any questions, but hopefully that perspective on momentum continuation and where we are relative to monthly levels makes sense. The earliest, I think, if you want to see strength for more upside, the earliest I think that becomes viable is a reclaim of 23.3 or thereabouts. Even then, it's somewhat tricky because you're still buying what is likely to be monthly resistance based on intraday price action. There's always a risk associated with that, but at least then you'll have some sort of clear invalidation. Otherwise, I would just treat this range as a range, and if it pukes, same as I said, the decision tree, that's a mouthful, is rather straightforward. If it pukes, a reclaim of the range is good, or holding some sort of support structure in this 20k area is good. Everything else, you should probably just let the monthly time frame unfold. As far as ETH goes, this is also looking rather messy around this sort of double top that we discussed. Some viewers for whom I'm grateful pointed out that this double top was actually spiked on this move more noticeably across different exchanges and some perps, which certainly kind of moves my view a little bit. I would still say that given we have Bitcoin in or around some form of range low, the equivalent for ETH would be 1,500, and if then that's not good enough, then similar for Bitcoin, where it starts to look really ropey below 20k. I think for ETH, the sort of high 1300 to 1400 area is also kind of the last port of call for any type of decent pullback, and everything after that starts to look scary. Again, these raw levels that we covered in the other video, the last week's Monday Markets segment, so be sure to check that out. As far as legacy markets go, given they are in the spotlight as far as headlines and all of that, there isn't anything terribly interesting as far as technicals go for the time being. The market is still trading above the 3900 pivot, which is important. I think we had this level on for some time as the daily range high, where the market appears to be offering a reaction at the moment. So as far as intra-week range goes, this is what we've got, sort of 4.1k to 3900 is the consolidation within which the market is currently trading. I think from a higher time frame point of view, it starts to look somewhat scary below 3900, definitely scary below 3700. If it wants to consolidate here, all of that is tolerable. If it starts breaking bigger levels, that's when things get a bit scary. Final bit on this is the dollar index. You know, kind of been waiting for this to do something for longer than I'd like to admit. I'd say it's certainly taking its sweet time, and it'll also likely respond to the catalysts that we have coming up this week. You know, equities weakness, dollar strength, equities weakness, whatever it may be. I still think this has some ways to go before it starts looking particularly threatening. And in general, I'd prefer to look at the indices themselves. But I will say that it's still in an area of high time frame support, so not the best spot to get particularly complacent. As far as altcoins go, you can see they're taking a beating at the moment, but I'd also like to announce, and some of you might be disappointed that, oh, you said you're going to cover alts next week, but you've done Bitcoin and ETH again. I think, and let us know in the comments if you want to see this and if it's a good idea, because again, this channel is for you more than anything. We were planning on making a new addition to the Technical Roundup video repertoire, which is Altcoin Thursdays. So on Thursdays, either I or Don, I think it's primarily me, unfortunately for you, it's a stream dedicated to altcoins. So we'll just go through this entire watch list and look at comments from last week, adjust the watch list, and just give you levels, give you ideas, and just talk about altcoin market structure, specific setups, whatever it may be. So if you want to see Altcoin Thursdays added to the channel, leave a like on the video, leave a comment so we can gauge interest, and if there's enough, we'll simply make it a regular addition to the channel, because, you know, obviously doing all this work for free simply wasn't good enough, so we decided to add more because we hate ourselves, and self-punishment is the only route to stoic success. Otherwise, that's all I've got. Bigger picture, like if my mate at the pub were to ask me, hey, what do you think of BTC? I'd say, yeah, it looks all right. There's just some monthly resistance here and a bunch of fuckery coming up. So I'd probably just chill and see if there's a pullback, how far it goes. And if not, I'll try to chase it through monthly, weekly momentum if it gives me a chance. That's what I tell my mates, but I don't have any mates, so I have you instead, and that's why I'm making this video. And yeah, similar for ETH, go look at last week's video for the levels, but it's more or less the same scenario. You know, the 17, 16, 70, 60, 80-ish level is also the monthly range high, so we're definitely seeing some pullbacks and churn from there, and it's certainly not made easier by the fact that this coming week is a bit of a clusterfuck in terms of headline risk. So yeah, usual disclaimers apply. That's all from me. I hope this is helpful. Like, subscribe, YouTube, algo stuff, whatever. Make sure to go to trletter.com, which is our free weekly newsletter. That's going to come out in like 16 hours or something, usually in the afternoon, sort of morning, afternoon UTC. It's also free and just has a bit more commentary, all of our levels in a slightly more organized fashion. So be around for that. Thank you for your support. I'm going to shut up. Have an awesome evening. Bye-bye.